Well, hello, active traders, and welcome to our Trading Week Ahead broadcast coming at you live here on Saturday, October the 16th, the 15th here. As we get underway with our session, we got lots of good charts to look at, and one thing we want to stay on top of is how to trade this market moving forward. What are the key technical signals that will tell you how to make a successful approach for entries and exits, and where to stay clear of, and what's next, right? So as we take a look at the market, you can see obviously we've been in a downtrend. Every attempt of buying this market has been met by an overwhelming force of selling. As we correctly forecasted for you last week, I said that to discount this 3-day move up, that it's nothing, the market's going to go back down, which it did. We do have a bullish engulfment here, right? That's definitely bullish engulfing, but because this, I don't know if that's a dark cloud cover, I don't know, I'd have to remember, but because we ended down in the midpoint, market's been climbing its way back down. So I'm still very bearish in this market. Another supporting technical thesis for being short the market is our VIX is still in a very obvious uptrend, a little uncertainty there on Friday with the doji painting, along with Tuesday and Wednesday doji, but we're still in an uptrend. And one way to see if we should, and this is a very good advanced technical tip, is to make sure that we stay above the upper bounding box of the channel that the VIX is currently in. All right, so you may have seen, well, I won't mention names, but there's one smart guy on the financial news that does technical work with channels. Anyway, the point is 30 would be a key support level for the VIX. So if our volatility index drops under 30, that will be a slightly bullish sign. Then if it stays above 30, we're going to stay bearish. So as long as the market stays, or as long as the VIX stays over 30, we remain bearishly entrenched in the market. Obviously, the VIX has been going up and up and up, and it's still in an uptrend up near the 3-month high here. So we're still relatively bearish. Now, one thing to pay attention to in context of this market is, okay, what does that mean to us as traders? Well, where are the trade opportunities? Now, obviously, we've got our inverses. I've been mentioning SQs as one of my favorites, and UVXY my other favorite. Those are my two favorite ways to short the market, and I'm long both of those instruments. Heavy UVXY, I bought over 1,000 shares on Friday, yesterday after the bell. I think I'm 1,700 long, 1,700 shares UVXY, and I've also got a fairly decent position in SQs as well. And they're both really good ways to short the market. You want to short tech, and you want to buy volatility. That makes sense, right? Technology with its multiples way overbought, and now it's been selling down dramatically. So SQs has regained nicely, and our volatility ETF UVXY also continues to move up nicely. If we take a look back, let's take a quick peek here. Let's use the 6-month. When you see a channeling uptrend after a sustained drop, this is kind of a check mark, a hockey stick, especially on high volume. That's a good reversal pattern. And if you look in context, you'll see that nowhere in recent history have we had a nice, steady 45-degree angle uptrend in the UVXY. So that's an especially strong reason why I'm favorable in this and heavily positioned in this. I'm building a strong position. I want to be in at least 5,000 shares by the time we hit 20, and I'd like to be in over 10,000 shares over that 27 up there, okay? Because I fully expect the market to come crashing and burning all the way past the COVID lows, and these instruments are a really good way to potentially make a fortune shorting the market. So, and in addition to buying puts on your S&P. So buying index puts and going long inverse and volatility ETFs is a intelligent strategy designed to maximize our success in today's markets. You can see the SQs swing up here near the 1-year high to right over 70 would be a really good place to scale in aggressively on the SQs. Now, one thing I wanted to mention before we continue, just a quick note that I am doing the coaching program launching soft launch early December. So fill in the blanks. Let me know if you're interested in that, or if you have any things you'd like me to cover that are not covered in that. This is a year-long premium coaching program that I'm launching. I've not done one of these in, I think, almost 5 years. It's been a while. I do these very rarely because they're a lot of work and I've got a lot of people involved. And so, and they're very popular too. So anyway, I still have to create a video for this, but a premium profits coaching program. And thanks to those of you who've been applying, we've got a lot of membership applications in already. I will be getting back to those of you who've been applying with more information later. Anyway, back to it. In this market, it's really important to look at 1-year highs in whatever we're looking at to kind of filter out the weak charts and get in on the strong ones like this one. So if you're looking at inverses, you want to do a comparative analysis to see which ones have the best upside and also which ones have the best volatility. So short small caps with your TZA and short the NASDAQ with SQs, long volatility with UVXY. And let's flip over to intraday charts. Now, and again, if you have charts of your choice that you'd like me to pull up, do feel free to post the tickers and I will go over those today for you. Now, here's an example of a reversal play or a range-based trade. And in this kind of setup, you look for a bounce or a pivot off of a previous support level, and then an exit target is the previous resistance. So, say you bought the 14.45 here, exit target would be somewhere up here, right? And that's sure enough where it stalled and dropped. Using the 2-day chart for day trades is especially useful because it gives you support and resistance. And also, when you have good volatile charts that go up and down, like our Bitcoins, like Marathon or Coinbase, really helps you eyeball the range and how to set up your trade. So for example, coin had gone on Thursday from 70 to 61, about a 9-point range here, went 73 down to 63. So another, almost 10 points here. If we trade this on a bounce, say on Monday, if it starts to go up and we buy 66, it may go up here. So we tighten in a trailing stop as it runs. Or if it craps out and goes down, we would use that height of the range as an exit target. So my main point is just be aware that the ranges are really useful because they make it easy for you as a trader to identify, the height of how far something's likely to run, the high and the low of the day, and use that delta or that change in terms of day over day price action to really help you figure out how to map out your entries and exits, and importantly also to help keep you from getting in too late or trying to trade something that has already done its big move for the day, so that you're not chasing, you're not scrambling for an exit. I don't know how many of you use 2-day charts, but look at this. The range day over day, it's like a mirror image, right? Identical range, or very close. You can see 13.8 on Thursday to 12.5, so that's a 1.3 delta. And you can see here 12.12 to 13.5, exactly to the nickel with a 1.3 is the trading range. So that's the ATR for the UVXY, at least lately, has been $1.30. So armed with that knowledge, for example, not to buy if it's already gone $1 or $1.20, because it's only going to go about $1.30 most likely. So those kind of extrapolations are helpful to help you not only not chase, but get in early enough to where you can make a successful entry and know where to tighten up a trailing stop exactly, to be able to maximize profit on that trade. So when I do my trades, I was trading this aggressively yesterday, as I usually do. I knew that it had a 1.3 delta and 1350 would be it, stick a fork in it. So that's where I exited right between the 13.3 and 5 because that was the extended range to the upside. So the point is, on a 2-day, make sure you use 2-day charts because they give you the range and also the average volume and also how far things run before they stop running. Another quick price projection. You see that like the average height of the run is about yay tall, right? So that told me when I bought this yesterday here that that's about as far as it would go here before it stopped going. The height is about the same. So as a pattern day trader, I'm always looking for range, inside range patterns. How far did it run before it stopped running in a single run, like Superman, in a single bound? How far does it go before it stops? So using that to help manage entries and exits very carefully, day over day, makes for a much easier way to trade because the answer key is there for you. Called the previous day's chart is a substantial part of an answer key for how to trade the current day, starting with the previous day's range. And then inside range runs. How far did it run? Anyway, just a quick tip there, word to the wise. Let's see, question about it. Well, here's a good strong chart. Someone had given this to me earlier. TBT, if you look on the daily on this one. Wow, big turnout today. Schwang. We could have made some money with that, right? It only went from 16 to 34. That's a doubler and then some. Bum, 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 bum. Flawless victory. Rated wins. Anyway, what a run, what a trade, what a chart. Now, the key to successful trading, or one key to making more money at least, is to position sizes. My colleague, the late, great Dr. Van Tharp, taught scaling into winning trades, legging into your trades every now and then makes a lot of sense because you can leverage. And, the key is, how do we do that consistently? And the only way to do that consistently is to have consistent charts that have consistent price action with enough leverage potential. So that rules out the very cheap and the very expensive stocks. Does that make sense? Stocks under $10 are for morons. Stocks over $100 have bad leverage. Stocks in the $15, $20 to $30, $40, $50 share range are the prime time, the prime spotlight. At least that's what I'm an expert in trading. I've done tens of millions of dollars worth of trades in that range. Usually the 15 to 30 is a really good trading range, 15 maybe up to 40 or 50, but usually 15 to 30, that's my specialty of the price, like this chart. These are the kind of charts that I like to trade. Things under $10 are too haphazard and random to attract the attention of intelligent institutional investors. So you don't see, big companies that have a brain trading $3 stocks. You see moron kids that make YouTube videos trade $3 stocks or low float things under $10. That's for amateurs. And professional money managers, they're in it for the longer term. So they're trading your Apple and all that kind of thing. But those higher priced high flyers have poor leverage compared to some of these charts, right? You're not going to see this kind of a percentage delta on an Apple, as wonderful as it or Microsoft or Costco might be. So that leaves, so it's like, those are the tails of the distribution. If you look at a normal distribution, the tail ends, you got the cheap stocks on one end, stay away from those. Expensive stocks on the other end of the normally distributed curve, avoid those. We want the things in the middle that have both volume, volatility, and consistency within which to make our trade decisions. Okay, let's see. Somebody asked about MAXR. Well, it's got range. I like that. It may be doing a pivot off the low here, which is good. But that's still a terrible chart, right? That's a distributed chart. Now, we do have a bullish engulfing on Thursday, so that is something. And we do have kind of a dragonfly doji back, almost looks like a hammer back here. So it may be on the mend, may be worth a shot over 20 or 21. What I do like is the range. That's one saving grace. So if you do bottom fishes, I do like the range. Exit target though would be around 29. Remember, that's one thing that I teach is you can often use decade values, multiples of 10, as key support and resistance levels. So you don't buy anything with a 9 in it. And you can see this illustrates the Calhoun don't buy 9 rule, right? It got to 29 and it faded right back down to 17. So don't buy anything with a 9 in it. Sell into the 9s if you're in something on the way up, and then wait until it gets over. In this case, it'd be over 30, say at 31 a share for new entry. Let's see. And right, well, when you're saying TBT relates to rates, hey, Phil saying, how did I change it? How do I deal with the market like the past Thursday, big swing? Well, I usually day trade, so I'm in and out of whatever goes up. For example, on the big move up day, I made a lot of money with the SOXL, and that's one that I trade on up days. So I trade SOXL, and I teach my members how to do that in the live room. I knocked it out of the park with that one. Boom, flawless victory. And this one, I just did my one triggers the other order flow, and I just put on the trade, and I had an errand to run in the middle of the day, so I just let it go on autopilot. And when I came back, I was nicely up in the money, and I promptly tightened up the trailing stop and booked a good profit on the SOXL. TQs is another way to trade to the long side, right? But I like, my bread and butter is SOXL because it's relatively inexpensive and it's got really good range and good volatility. Really good instrument for going long. I pair trade. I go back and forth. So as this goes up, I buy it and I trail the stop. And when it flips and goes down, when this thing goes down, I'll go put on a trade simultaneously. I'll flip into my UVXY on a pivot. So we trade both sides of it using the strongest of the charts. That makes sense. Say trader asking about Disney. Let's take a look. Okay, well. That's actually not bad. I like Disney. Like I mentioned way back in July, I said that over 100 would be good, and it ran all the way to 126 or so. And I still will say that 102, not a trade recommendation, but personally, I'd be looking for Disney long if it gets over 102. That would be a bear cup reversal. It looks like a big letter A, right, or a bearish cup in here, and you can see. Like psychological support resistance is always going to be at these big ass day. Well, you can see over here 100 was support, 100 previous support, new resistance, and I use the 102 as kind of a filter. So I would look for long over the 102 if Disney recovers. And again, the exit target would be up at like 118, right under that 120. So it'd be a nice trade setup in Disney from 102 up to 118. Thanks. Steven's asking about Costco. That's a terrible chart. I see no reason to buy that chart. None whatsoever. Has no redeeming qualities. Let's see. Trader asking UNH. No, this is also a particularly terrible chart because the volatility does not justify the big price tag. It's a $500 stock with just 100-point delta. So that's not much range, and it's a choppy, what I call a caterpillar fuzzy chart. It's not clean and well defined. There's no clear signals for buying or selling this. That would be a terrible chart for active traders. Someone's asking about DraftKings. Thanks, Thomas. DraftKings, another terrible chart. It's back down in consolidation, but it looks like it's more a short under 10 than anything else. So I don't think so. Let's see. How about Ford? I still like Ford if it breaks the pivot over the 13 or so. But the problem with Ford is it doesn't have as much volatility or range for active traders. It's a very slow moving instrument. So if I were in it, I would sell it. I'd use 10 as a hard stop if I were in it as an investor or whatnot. And I might want to start building a position over the 13 and the 15. But we've got charts with bigger ranges. No, like a range like this. Okay, now this one I like. Okay, plug has range and it has evidence of previous strength, at least back in August, all the way up to the 31, and it's come back down to its prior congestion area. So of those charts, I've gotten a request for those. Of those, I like the plug chart best compared to Peloton and Neo if it breaks the 20, right? So if it gets above 20, it may be worth considering with an exit target of where. Remember to play the decades, people. Bum 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 da 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 ba da bum bum bum. Always play your decade values. There's 30. There's 20. There's your trade. Or short under 16 if it drops, right? But if it does bounce, if it gets over the 20, I play within the decade regions, like everyone did who was trading this, unbeknownst to them, right? But that's how things work. Aha, there's answer key. He showed me the answer. I didn't see that before, the 20 and the 30. Multiples of 10, folks, you trade within those. Just like when day trading, I trade within whole dollar ranges. So if I buy 14.10, I'm going to sell 14.90. or tighten the trailing stop really close as it gets closer to that 1490, right under the whole number between the 14 and the 15. Here, 20 to 30. So we've got a 10-point delta, 10-point range on this chart. Obviously makes sense to not touch here, but if it does get over 20, say 25, 20.5 or 21, it'd be worth starting to scale into, and with an exit target of 28.29, right? Does everyone see that decade range approach? Now, again, this works on this kind of chart, one that's, like I say, my favorite, $15, $20, $30 share range. That's what I trade. You don't use this approach with a $3 low float crap stock. You don't use this with a $200 overpriced tech stock either. Use that with this kind of chart and this kind of stock. Hope that makes sense. Let's see. Joel's asking about Shopify. Dun 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 dun. That looks like a horrible chart. I wouldn't trade that in a million years. It's a really strong, slow grind sell. Another quick tip. The slower and steadier the grind up or down, the stronger the chart pattern. This is a very strong selling chart. I would short 22. That's what I'd do on that chart. I'd short the 22. Not a trade recommendation, but that's what I would do. It's a very strong, slow grind down. Now, if it had been a very sharp drop, say in several days, a vertical drop, dead cat bounce, okay, then it might be a play. But something that's been this strongly sold off over time says there's much more much more behind the scenes selling likely ahead. So that would be a terrible chart to trade, I would say. Okay, Eric. PayPal. Now this is a horrible chart to trade. Again, knowing the difference, it's very, 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 very important that you folks understand the difference between shit charts you should stay away from that you're not going to make money with. They're going to bite you in the ass and cost you money versus charts that you actually have a shot at making some money with. That's really important. Now, what's wrong with this chart? Range is okay. Range is acceptable. 70 to 100, 30-point range. I don't have a big problem with that. What I have a big problem with is this is a terrible chart pattern. There's no... it's like, I don't know, look at that. Shrug your shoulders. I don't know, is it long, is it short? It looks like it's a selling chart for now, but I don't see any strong pattern or trend to form a basis or thesis. I don't have an edge. You always don't have an edge. My old newsletter used to be called Trader's Edge back in the 90s. I was looking for an edge. I see no advantage to trading this. I see a shit chart. So no, I'm not going to trade that. Just say no. And it's asking on Twitter. Tweet this, baby. Boom. That's actually an okay chart. I like Twitter. Okay, Twitter will pass. That would pass my smell test. Is it worth trading? Sure. Over 53, right? That's good, actually. The range is good. Check mark on that. 32 to 52, 20-point delta on a $40-ish instrument. That's good enough range. So there's money to be made or lost in this. It'd be a fade under 48, a short 48. But the better plan this would be, and we've got a pennant pattern here with the flagpole going from 43 to 52. This would be long over the 53. And we're also at a 6-month high here, right? This is testing prior resistance. It just did that a couple of weeks back. So yeah, actually, Twitter would be good. So out of those 6 charts, Twitter looks good. And Nick's asking about Lilly. Let's take a look at Lilly. That's a shit chart. Nowhere in the world would anybody trade this. What a horrible chart that is. Not only is it choppy as F, but it has no range that's worth trading. It's only got a 60 range, a 280 to 340 on a $300 a share instrument. That's a terrible chart. That would be difficult as F to trade. You want charts that are clean, that are focused. I don't know, that go a little something like this. Now, which chart is better? That one, eye test, or that one? That one's fucked up. I mean, that one's effed up. That's a beautiful thing. That's a supermodel. That's a 10. That's a woman with some long legs. That's Rosie. All right, so no, you're fired. Okay, what else? SLV. I mean, come on, folks. It shouldn't be that difficult. That's a horrible fucked up. I mean, that's a terrible chart. It's a slow grind down. It'd be a short under 16, but that's a terrible chart. Slow grind down, no consistent pattern whatsoever. Someone's asking about HMC. Come on, guys. You should know better. HMZ, that's not a chart. So what's that low? Okay, PRTA. That lit up. That'd be more for a swing trade, a day trade. I would day trade within that range rather than swing trade that. I like that it gapped up. That's something, but I don't see a consistent pattern. So without consistency, it does have volatility because of the gap. So it'd be worth day trading. That one's not good for swing because it doesn't have a steady up. Someone's asking ET. Oh, what a horrible chart that is. Look how choppy that is. The range is terrible too, from 9 to 12. Why would we touch that? Can't touch this. Da, 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 da. Bed Bath & Beyond. Now that's actually worth trading over the 6, right? If we get a bounce, that's a meme stock. Sure, that one, we can have fun with that one. How about, okay, someone's asking SPC. That's one we've covered before. No, it's still in sell mode, so I wouldn't be interested in it. It does not have a pattern that makes sense to trade. Run might be okay for a pivot, but again, we want consistency. I like charts that have some kind of consistent tight range that's showing proof of accumulation over time. Now, Smart Trader mentioned this one, I think it was about a month ago. I forgot which of you had mentioned this one, but TBT. Like, that's a beautiful chart. Compared to all the charts that you folks have given me, this one's clearly superior, obviously, right? You want to find superior charts that can produce superior returns. You don't want to throw darts at charts just because you like them, the company, or you like the forward earnings. No, we don't care about that. We care about price action. All that's successful trading about is math. It's all about risk management, law of large numbers. Like Sazonov brilliantly says, trade small, trade often. Oh yeah, by the way, we are doing the World's Top Traders event. Tom Sazonov is my keynote speaker coming up Saturday, December 17th. Be sure to register now at www.worldstoptraders.com. Bum, 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 bum. He and Larry McMillan and Steve Nissen and myself and others to be determined will be speaking coming up Saturday, December 17th at www.worldstoptraders.com. I'm not going to spell it, worldstoptraders.com. And Tom is thankfully, I'm grateful to him, is going to be my keynote speaker again. Be sure to watch his first call every Sunday evening on YouTube. A brilliant show. He always goes over the futures and crypto, whatever. He's got a sidekick that they go back and forth with. Entertaining and really brilliant, smart stuff. So I am a big fan of Sazonov. He knows his stuff. He's one of the few people in the education industry who's actually authentic and actually really knows a whole lot of stuff. He's a brilliant guy. And like he says, trade small, trade often. Anyway, this is a good chart. If you have trouble trading, it's because you guys are trading some of those effed up charts that you were asking about. I mean, seriously. Okay, let's see. Someone's asking about Citigroup. Recovery range isn't sufficient. Typically, what you're looking for in a pivot is 50% of the delta, 50% of the range. That's another good rider downer. You're looking for to profit about 50%, a mean reversion of 50% of the upside. And then the question becomes, percentage-wise, is that delta worth taking the shot? And from a liquidity standpoint, we only have 45 to 55, so it's only a 10-point total recovery range, of which we may at best get $5 of. So is my risk reward? So if we buy 45, we might get up to 50. Is the risk reward worth it? No, it's clearly not. It would be very difficult to get 5 points out of this, and at $45 a share, that's not enough profit target. Right? We want things that have bigger ranges if we're going to take a shot for a pivot. So if this had gone from like 54 down to 34 and was bouncing, yeah, it would be worth it. But down here, maybe not. Bottom fishing. Would this one be worth bottom fishing? Absolutely, right? AMC, meme stock down at 6, off a high of 27. The 50% recovery, let's say we buy it somewhere over 7 or 8 or whatever, the upside on that's $20 total range, of which we may at best get 50%, which would be $10. Now, is making $10 for every $6 you invest a good risk reward? Well, of course. So this one does have sufficient range and sufficient upside to make the delta worthwhile. That's a good professional tip, and I will This is the kind of thing that I'll be covering in the coaching program and then some. But let's take a look here. Draw. Just to make it crystal freaking clear for our home studio audience. There's no NF that's going to get up here. It may get up to here if we're lucky. At best, 50%. So half of this range would be about there. So if we go and say over 8, I'd be happy to get 12, okay? And that's a good ROI, right? If I can buy at 8 and get 12, that's a 50% delta on my money. So that's obviously worth it. Best case, again, look for 50% of recovery ranges at the very, very best, 30 to 50%, and no more than 50% of the range. So if we buy the 8 and we scale in, and if we get up to 12, that would be a really good round trip on a swing trade. That would be a successful swing trade. It'd be a really good successful swing trade if it were to get back up to the 15, 16 or so. But anyway, that's kind of the range delta. That's part of what you're looking for as a trader. So if you apply that kind of math and that kind of intelligent professional traders thinking approach to qualifying charts, you end up with a much more stringent criteria. You look for charts that really have not only a clean chart, but big ranges to work with as well. And that's the kind of thought process a professional trader takes. It's all about the math. It's 100% the numbers. It's nothing more. Nothing more, nothing less. We're looking for numbers-based trades. All right, let's see. I'm gonna put the link in comments. Oh yeah, sure thing. Good idea. Let me give you guys that link to join Tom Sosnoff, Steve Nissen, Larry McMillan, and more, and myself. Okay, so I just put the link in chat. You can register. It's absolutely free, and it's not some stupid pitch fest like some of these other places. Have you ever been to one of those like multi-speaker events where the thing's a big circle jerk pitch fest, and they're all trying to sell you shit, and it's overpriced shit? Oh, it's normally $10,000, but because you're here, it's only $8,000. Yeah. Limited time only. There's only, and here's how it coulda, shoulda worked, but they have no P&L proofs to actually even trade. Okay, well, if you're tired of that kind of crap, come to my events instead. I only do 1 or 2 a year because I'm not a marketer. I don't need to. We already got lots of money, but I like to do these just as I like working with these guys because they're sharp, right? The best they are the world's top traders. Guys like Nissen and Larry McMillan, and the world's top candlestick guy, the world's top options guy, and Tom Sosnoff, who's one of the world's top guys in the industry. Period. Anyway, it's there, and we only speak half an hour each, so we don't do any pitch fest marketing bullshit like you may have seen. Have you guys ever been to one of those multi-speaker events? The kinds where it's like a big sales event basically, and they're just trying to pitch stuff. I think that's bullshit. So I don't run that kind. I run something that's actually like 99.9% content, and they say, and by the way, if you want to learn more, go to my website at the end. No big sustained sales pitch. So we don't do sales pitch PowerPoint crap like other people. I actually like to do it the right way. 30 minutes each, hit the ground running, give us your best shot, and then move on. Anyway, worldstoptraders.com. You're welcome to register for that Saturday, December 17th event. And I put the link in the chat. All right, what else? Okay, what time frame is your lower right box in the S&P? That's 4 1-minute candles. The SPX at the bottom right. Hey, thanks, Greg. Saying great session. Thanks. Hey, well, thanks for being here, man. I appreciate it. Bryce is telling me Bank of America CEO informed all employees there will be a meeting Monday morning. I'm hoping for fireworks. I'm hoping the market's going to crash and burn, baby, because I'm long 1700 UVXY, so it's all good. I love trading. I never get tired of it. But seriously, I want you guys to start thinking about the difference between some of the tradable charts and non-tradable charts from a range standpoint. Because I shot down most of what you guys brought up, and it's nothing personal because you don't know any better, right? So no harm, no foul. The only foul is in not asking. So I'm glad that you asked. But you have to really identify where the real money's at and where you can make it easier than tougher. The tighter, the cleaner the chart, like this, the bigger the range, like this, the better the chart is, like this, right? The choppier the chart is, like I always used to pick on AT&T. I don't know if it's still as horrible as it's always been, but let's pull up old T. Actually, no, that one's actually not bad. AT&T for a balance, not too bad over the 1550 or short. We got a bullish engulfing down there. It'd be a fade under the 1430 or long over the 15.7, but that one's actually not too bad. But some of the ones that you guys had asked about are. So interesting shit. All right, well, you guys have been great. Thank you so much for being here. I think we're going to wrap up, and I wanted to, on behalf of all of us here at TradeMaster, I wanted to thank you for your comments. And by the way, help me design this website. If you want to, I am not finished with it. It's a work in progress. Write in the comments like what sucks, what's good, what's missing, what would you change, what other things should I include in our coaching program next year. And this, I've got the outline here, kind of short and sweet, of what we're covering. We meet the 2 Saturdays of each, the first and third Saturday of each month throughout the year, plus a lot of individual, private, one-on-one Zoom phone calls, or Zooms or phone calls, you choose. And I work with traders individually to help turn around, make, and say, improvements in their specific trading approach, their process. I ask what their process is, and start to finish, and we take a look at how to improve it. So anyway, we've got lots coming up. I'm still working on the page here. But anyway, that's a coaching program. It's at trademastery.com/premium. And I will close by asking if you want to take a look. I put that in chat here for you. Yeah, trademastery.com/premium. And I've not done one of these big coaching programs in nearly 5 years. I don't do these all the time. I'm very busy trading. And I've got P&L proof, for what it's worth, I got my 1099 from Fidelity from last year, show that I do actually have the experience, right? I do have a lot of experience. And I was voted #1 author in stocks and commodities, blah, 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 blah. I used to speak at the Money Show events. Anyway, something to look forward to. And I'm looking forward to working with you. Thanks to all of you who sent in applications. And if you want, you can apply for membership. And it's just a quick, fill in a few questions, nothing really onerous or detailed. How many years experience do you have? What do you hope to achieve as a result? And what are some challenges? And just send that in, and that's it. So if you do want to get on the early bird list, at least to be notified when tickets are on sale, if you decide to move forward, do fill out the application. We've got quite a few people who've done that already, and thanks to all of you who've done that. And don't worry about this 72 hours. That's for the official launch in December, but to get an early start, you may want to fill that in. So I think that's going to wrap us up for today. So thanks so much for being here. I do appreciate it. I want us to hopefully all do well in our trades. Remember that key support resistance level in the VIX. We do want to make sure that we are attuned to that. 30 is what I'm going to use as support, and obviously 35 resistance. But we're going to use 30 as a support level. If we don't want to swing trade long stocks unless the VIX gets and stays under 30. All right, that's #1 tip. And #2 is we want to aggressively short this market by going long in things like SQs and UVXY if the VIX holds above 30. Now, another quick note. All the VIX has to do is stay over 30, and the market will likely continue to grind downwards. The VIX does not have to continue to spike up higher to see weakness in equity markets. If it does, we will see even more pronounced selling. But as long as the VIX stays up in this region over 30, we will likely see continued selling. So do be on the bear side of things as the market continues to move, unless the VIX gets under and stays under that 30 mark. Okay. That alone is worth being here for. That's a good tip. All right. You guys take care. I will see you next time, and have a great weekend, and be safe out there, and let's trade smart. And again, my live room, trademastery.com/live. If you want to join me Monday through Friday, I'd love to have you there. We've got I think it's $97 for a 2-week trial. You get a money back guarantee. So you can try it at no risk, and join me live in the markets Monday through Friday. All right. Take care, folks. Hey, Dan. Good to see you. All right. See you next time. That's a good point. JQ saying also if the market's going up and the VIX doesn't move, that indicates negative sentiment. Yeah, that's true. Always look for VIX divergence with the market. The story should add up. The VIX and the market should add up. If they diverge, if one goes up and the other doesn't, something wonky is going on there. So you want to stay safe and stay clear of the markets until we have really strong signals. And of course, I tell you exactly what's worth trading and where to enter and where to exit Monday through Friday in my live trading room if you'd like to get more detailed how-to tips for how to trade today's markets. All right, see you next time, and bye for now.